everybody, it's Greg Harrelson here, Century 21, the Harrelson Group, with my co-host Abe Safa. And as you're completely aware, hopefully by now, Abe and I do this Myrtle Beach Real Estate TV every Wednesday. And we like to be consistent in giving you the information that you need in order to, make great real estate decisions. So Abe, thank you for showing up again. And I know you're going to have some good data. Let me just kind of fix my camera right there.
Yeah, hey, Greg.
So is the market shifting? Is the Myrtle Beach real estate market shifting? That is a question that, we want to talk about today, because, what's interesting is we've got friends all over the multiple states all over the United States that are in real estate. And we're constantly talking to other people, seeing what's going on. And, I've talked to people in Rock Hill, South Carolina, Greenville, South Carolina, Charlotte, North Carolina. All these are big markets in the Carolinas. And all of them have said that they've seen a little bit more inventory coming on the market, and maybe the days on the market has extended a little bit more. So that's interesting, and you could call that a shift, but there's a big difference in a shift and a crash. And I'm not even sure if there's a shift, but I just want to make sure that we disclose up front that we're not even getting close to a conversation about, is the market about ready to go down? We don't have the evidence of that. But what are your thoughts on this, Abe? I know you and I have been talking about this, and just, let's kind of share our thoughts with the audience here.
Yeah, so let me add a little bit of reference here so the audience knows. So you and I mean, we look at this stuff daily. So we're constantly combing all kinds of information from different sources, trying to see some sort of pattern that will allow us to see some sort of shift occurring. So like most agents, most people in economics, really in general, like, you don't know that you're in a recession until we see 3/4 of a decline in GDP, right? So we're talking about 9 months in the rearview mirror. Real estate is no different. So a lot of agents and the consumer out there don't even know that the market has shifted until we've gotten into pretty deep into it. I would say 6 months, maybe as much as 9 months sometimes before they even realize. So what we're doing, we're not saying by any means that the market has shifted or has even begun to shift. We don't know just yet, right? But we're constantly looking at data to see some sort of pattern that can kind of give us a peek into where we're heading. So that's kind of like what you and I are doing. So yeah, absolutely. Yeah. So we're looking at things, and we talk to a lot of agents all around the country, and we are starting to see some sort of change with the inventory. Yeah. Where whether it's flattening out, whether it's starting to go up in some markets, and I think that's an important factor to look at, because week after week, if you're watching these shows, you see that our inventory just been going down and down and down week after week. Now we get into a 2, 3, 4 week period where it kind of all of a sudden not going down any further. That's definitely something that's got our attention.
Yes, that's right. Because, because we'll see at that point, okay, is it going to go down again? Or once it goes flat, then there's a fork in the road. It's like, it doesn't stay flat forever. At some point, it will reveal itself, and we'll see whether or not it goes down or it goes up. And we want to continue to report that. What's a very, very important for the consumer to understand is it's important. The reason why we look at the data every single week is because of a few reasons. Usually, the consumer usually doesn't know the market has shifted until about 6 months to 12 months after it has shifted. That's the reality. Like back in 2005, 6, and 7, I remember, because we were tracking numbers back then, and it was August of 2006 that we noticed that there was some sort of like trend that was it was reversing. The trend was reversing. There was some sort of a trend, but it really didn't hit the news until 2007, and then they didn't declare there was a recession in 2008. But the people that rushed to get their property sold in 2007 and 8 ended up, some of the people in 2007 did okay, but by the end of 2007, surely 2008, prices started declining. And one of the reasons is because there's early indicators, there's key indicators that you can see that are kind of pre-transactional. for instance, if we start to see that inventory is increasing a little bit, then over time, we know that properties will end up having to be reduced. And then the closings in the future will close 6 months later at a lower price. And then the appraisers will then be reporting to the banks that the price is a little bit lower. And then that will trigger reports being generated for all kinds of news organizations and government organizations. Economists will be taking a look at that data because it's factual, it's not speculative. And then they'll start doing their newscasting on that. And now it becomes public knowledge. Right. That's kind of how this works. So I'm always trying to, and Abe is always trying to keep our finger on the pulse so we can have confidence in, and we can have evidence that will back up anything that we suggest to our clients. Unfortunately, in the downturn of the early, in the, like I said, in 2006, 7, 8, 9, 10, all those years, I remember in the beginning of the downturn, I was telling people, hey, maybe we need to be a little bit more fair on pricing and let's get it sold. Some people took my advice and sold it, and they kind of thought they sold it for a little bit less. But then a year later, they thanked me, because if they wouldn't have sold it and taken a couple dollars less, if they wouldn't have done that, they would have lost $100,000. And then there's, you know, plenty of people that didn't follow the guidance, and they ended up calling me, and then I did sell their properties for hundreds and $200,000 less. Are we going to experience that? No, I don't see any indication, because the problem back then is everyone was over leveraged. People today have a lot more equity. So there shouldn't be desperation, panic, and liquidation like sales that take place. Will the market correct? Definitely. What will that look like? We'll see when we see it. So what can you show us that's consistent with this dialogue?
Yes, I mean, what you're talking about, that 6 month to 12 month window, which you and I call it's a blind spot, right? Because the consumer is not going to know. So even when it finally gets to the media and the media is talking about it, it takes a few months for it to actually sink into the consumer. So when we're telling people about this data, we're so far in advance. Sometimes we look like, and we're definitely going against what the masses are saying, right? So let me show you this one chart that I looked at earlier this morning. So we're talking about, these are just condos, okay, in the entire market here. Now, let's look at inventory, month supply of inventory. This chart can go all the way back to January of 2006. So you see we bottomed out here in January of 2006 with a 1.6 month supply of condo inventory. This is overall condos. If you see where we are today, we're actually even lower. We're at 1.2, right? So if this is the same bottom as this one and we start seeing a increase again, I can't imagine it's going to look like this. This was extreme, right? This is when the market crashed. But I can easily see this going back up to a neutral market. By the way, this is an extreme seller's market, okay? Less than 6 months of inventory, which is, here's 5 months, so 6 months is right around there. 6 months is a neutral market, so we're in the extreme seller's market right now. But look at what happened during when inventory started going up. So it went from 1.6 from an extreme seller's market to a neutral market from January 06 to right there, April of 07. So roughly 15 months. It took 15 months to go from an extreme seller's market to a really 6.1 is a buyer's market at this point. So just went past neutral into a buyer's market. So January 06, April of 07. Now, if we take a look at prices during that time, okay, here's pricing, okay. January of 06 is right there. So look at from here, and as I move to the right, look at what happens from January 6 until April of 07. Prices are still going up, and there's April 07. Look at the difference between during that same 15-month period. So that is exactly what you're referring to, Greg. So the market was not aware, the consumer was not quite aware of it yet. Okay, even though inventory was going up, the agents that were paying attention, like you were, I know you were telling people Some of them didn't want to hear it, while the other agents say, no, listen, it's a great time. People are flipping, and people were still buying in during this time. And then these are the people that really got hurt. It actually went even further. So May, it even went all the way to June, and that's when it finally peaked. And then boom, you saw that big drop right there. So now June of 07, let's go back and look at the inventory. June of 07 puts us, oops, that's 08, sorry. At 6.4 month of inventory. That's when it finally peaked. Now we're in a buyer's market, and then from there was just no way to recover. They just inventory just kept going up and up and up, and it peaked at 28 months supply of inventory, which is insane to even look at that number again. But that's the blind spot, Greg, that you're referring to.
Yeah, I just, you know what I just did is, and first of all, you know what I just shared with you about 2006, and then in 2007, and then 2008 when the recession. I didn't actually know the numbers. I knew the chart, but it's interesting that this chart really follows with what I said about the 2007, and so I just Googled to June 2007 real estate. That's all I did, and when I Googled it, all the search results that I'm seeing is the financial crisis, Yellen feared housing bust, subprime market crisis. It's like all the news in that period of time was all like, it's over. And then right after that, look, bam. Now, the reason is, in my opinion, I'm stating so many things as is their truths and their facts. I have to disclose, this is my experience. I've been in the real estate market for a long time. But in my experience, what happens is people that are watching the numbers can see what's ahead, but it's speculative. So if you're relying on the information that we're sharing today, we have to say we don't know what's ahead in 6 months. But we do know historically that when these things happen, then sometimes there's a softening. Okay. Now, again, in 2007, those years, because there was so much leverage, people, they never planned to own the properties. They planned to flip them. They panic sold, which decreased the market very rapidly, because they may have had 3 oceanfront condos or 4 lots or 2 houses, and they needed to sell all of them but one. And that flooded the market, so it crashed it a lot faster. We should not see anything remotely similar to that, because we are, as an economy, as real estate owners, we are not over leveraged like we were before. So I do think we will see a softening. I won't make the prediction of when it will be, but there's no question that we're starting to see inventory just slightly kind of pick up. Just slightly.
Soften up a little bit. And interesting that you Googled that June of 07. So I just went back and looked at some numbers. When that news started coming out, we were already in a buyer's market for 90 days.
Yeah.
So we had crossed that 6 month supply of inventory and going into a higher buyer's market for 90 days before that news started really showing up.
Well, great. So, the next week we'll show some additional data, but I think one of the things that you did confirm is that when we're showing weekly, for those of you that listen and watch, weekly we tend to show the percent of properties that are pending. So like a pending ratio of all the actives, how many are, or all the inventory, how many properties are pending. We are starting to see, and we did see, I think in the last 2 weeks, that the percent for the first time in over a year decreased slightly. Now do you remember how slightly that number was? Because we'll probably talk about that more next week.
Yeah, I can actually pull it up. It wasn't much, but
yeah,
for the first time, it actually went down, and it was across the board. So single family homes, resale, new construction, condos, and lands, across the board, every one of them went down.
Yes. Yeah, everyone.
It was slight.
Yeah,
slight.
It was probably a fraction of a percent. It wasn't like 5% or anything like that. It was just it was a small number. And all that, the relevance of that is it's been up, 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 flat, 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 maybe up, up, flat, flat, down.
Yeah.
That's it. We're just the first one to say that this is the first week that we actually saw that it went down since pre-COVID.
It's getting my attention, Greg. So what I shifted from is instead of looking at these reports daily, I'm actually tracking the numbers every weekly. I'm looking at daily now.
Got it.
Now I'm doing a chart where every single day my assistant's going to put in how many actives there are, and I want to see a daily change and see how that gradually starts to change over the next 60, 90 days. See what happens there.
Good.
Yeah.
All right, man. Great information. And again, I'm going to continue to disclose, man, it is a seller's market. There's no question about it. And if I'm a seller, I think this is good times. So if you do have an interest in selling, yes, we're going to be able to put you in a position where possibly multiple offers. If not multiple offers, definitely high selling prices. And that's just the current market that we're in right now. There is some inventory where people are probably being a little bit ambitious in the prices that they're listing properties for. So we're probably going to see some inventory accumulate, because if the buyers are being a little bit hesitant on continuing to pay more, and sellers are continuing to be ambitious and going over, just completely overpricing their properties, we could see some accumulation of inventory, but that's what we're going to keep reporting on a weekly basis. All right. Anything else?
No, all set.
Okay. All right. Great job. Everybody, there's our contact number. If there's anything we can do for you, please reach out to us. Those are our cell numbers. Text us. We'll send you any reports that you would request. We hope to earn your business someday in the future. Talk to you soon.
Take care.